It's Thursday, June 2nd, 2022. We got a lot to talk about today. Before we do, I want to remind all of you to please give this video a thumbs up. Share these videos all over your social media. Make sure you subscribe. If you really want to support the channel, subscribe and hit that bell notification down below so that you are alerted with the newest videos. But without further ado, let's get right into this. As I make this video today, markets are open right now. NASDAQ rises nearly 2.5% as investors shake off weak Microsoft outlook and Fed hike fears. And we're getting more bad news than ever, and the markets are up. The Dow Jones earlier this morning was down over 300 points, and as I'm making this video right now, the Dow Jones is up nearly 300 points. So isn't that interesting? A 600-point turnaround with nothing but bad news. So what is allowing for this to happen? What do we blame? What's the culprit here that these fake rigged markets are going up with all this bad news? And I think one of the reasons may be, and let me know your thoughts, comment down below, but I think the markets were down earlier today. Markets across the board up as I make this video. I don't know what it's going to close at, but I think it's going to be all in the positive. What is pushing these markets up today? I think it's denial. The denial that the Fed is going to continue to raise rates. I believe that these markets actually believe that the Fed is going to reverse course. The Fed is not going to raise rates maybe in June, that they're going to take their foot off the accelerator, that they're not going to shrink their balance sheet. And I think that there's a lot of denial in these markets right now. And I think that that's why these markets turned green today on top of all of this bad news. Yes, the plunge protection team is alive and well, but I think that there's a lot of investors. I think a lot of this market is fooling themselves into believing that the Fed is not going to raise rates and that they're not going to shrink the balance sheet. Ladies and gentlemen, I believe they're wrong. We're going to get a rate hike in June. I would be totally shocked if we didn't. We will wait and see how it plays out. We've got 2 weeks. Comment down below. Let me know your thoughts. But let's get into some of the news today that helped to lift the markets. How about this? U.S. companies added just 128,000 jobs in May, lowest in the last 2 years, according to ADP. Small business took the biggest hit during the month as companies employing fewer than 50 workers reduced payrolls by 91,000. Leisure and hospitality, which has been the leader in the job market for literally years now, only added 17,000 jobs for the month of May. Wow, that's incredible. What does that tell us? That leisure and hospitality, the leader in the job market, adding only 17,000 jobs. And get this, companies with 28 or fewer workers, we've lost 300,000 workers this year with companies with 28 or less employees. So these ultra small companies have lost 300,000 workers this year alone. Companies employing 28 or less workers. They've lost 300,000 employees this year alone. How can anybody believe that this economy is recovering or thriving? It's beyond me. That's really, I mean, small business is the backbone of America. We all know that. And it is getting destroyed. Middle class and poor getting destroyed. You know, when I go into a city, they all look alike now, right? Everybody's got a Walmart. Everybody's got a McDonald's. Everybody's got a Starbucks. Everybody's got a Costco. So many cities across America now look the same because they're all corporate. It's corporate restaurants, corporate retail, big corporate banks. And now every city in America is beginning to resemble one another. Fed Vice Chair Lael Brainard says it's very hard to see the case for the Fed pausing rate hikes. This on CNBC this morning. She doesn't see the central bank taking a break anytime soon. She says we still have a lot of work to do to get inflation down to our 2% target. Yet these markets, the investors believe that the Fed is going to take their foot off the accelerator. I'm not convinced, ladies and gentlemen. I believe that they are going to hit the accelerator. It's going to destroy the economy. This is what they're going to have to do now to stop the monster that they've created with 0% interest rates, trillions in quantitative easing, and just this outlook that everything over the years telling us on the television that everything's going to be fine. Buy, go buy a house, run up the credit cards, go buy a car. This is what they've been telling us to do for over a decade. And now people are drowning in debt. The federal government is drowning in debt. The average household drowning in debt, credit card debt, auto debt, student loan debt, etc. And now they are going to crush the economy by reversing course and driving up interest rates. And the cost to borrow money is going to go through the roof. And you know the credit markets are going to be absolutely hammered here. People like Jamie Dimon and JP Morgan Chase, they're not going to want to loan money in this kind of market. And the minute that credit freezes up and banks aren't lending money, the entire economy freezes up. And we're going to watch this happen. It's unprecedented. Goldman president echoes Jamie Dimon's hurricane warning. This is John Waldron from Goldman Sachs agreeing with Jamie Dimon that we're heading into a hurricane. The dark clouds are rolling in. You're beginning to hear the thunder. And yet there are people that believe everything is going to be okay. And I hope it is. I really hope it doesn't get as bad as we think, but I think it's going to be much worse. Either way, I'm prepared to be wrong, and I can afford to be wrong. The question is, can many people out there afford for me to be right? If I'm wrong, I have a lot of food, security, gold, silver, and cash put away. If I'm right, then most people don't have a lot of cash, gold, silver, or security put away for what's coming, and they're going to be in very, very big trouble. Parler CEO warns tech layoffs are just the beginning. You better have something to fall back on, ladies and gentlemen. And there's a lot of people out there that work in the tech industry. They might be sitting in a bank right now. They might be sitting in a cubicle somewhere. And so many people who have a 9-to-5, sitting in a cubicle, pressing a keyboard all day, what are they going to do if they lose their job? And if you look at people in the building business, anything related to real estate right now, somebody who might be building pools, somebody who's an architecture, somebody who is a grader, somebody pounds nails like a carpenter, a real estate agent, somebody working in the mortgage business, an appraiser, a lender, etc. These people are going to be in big trouble. You need something to fall back on right now. So if you're sitting in a cubicle, or if you're in the housing business, or you're in tech, you're sitting in a bank, wherever you may be, you need something to fall back on right now, because we are going to see massive job losses, layoffs, and many of these jobs are never coming back. I believe that the housing market is going to be absolutely rocked, and anything related to it is going to be rocked. Too many people in these types of businesses have been order takers, and not everybody's going to lose their job. The people who are very, very good at what they do will hang in there, but they're going to have a few very, very rough years, especially in real estate. But many people in the building business, in real estate, in the business of housing, have been order takers. And it's easy to survive when you're just taking orders. But now we're going to find out what people are made of. We're going to see who has staying power, who's going to make it, who's not. Because when you have an industry booming, say like a couple years ago, the auto industry, a year ago, when they were just taking orders. Now, look at it. Business is dried up, people don't have money, and they're dying. But I'm sure a couple people are surviving because they're just that good at what they do. You have to be extremely good at what you do. And I believe it's really important. It's an insurance policy to have something to fall back on, because these industries, auto, real estate, tech, you name it, going to be absolutely smashed here throughout 2022. The hedge today, U.S. factory order growth slowed dramatically in April. We saw growth at 0.3% month over month. And remember, somebody pointed this out. Remember, this also includes the replenishment of $80 billion of military equipment left in Afghanistan. Another article, Auto Armageddon, May sales data shows dramatic slowdown in U.S. new car sales. Again, the lack of stimulus checks, a lack of the unemployment bonuses, rising interest rates, costing more money to borrow money. This is rocking the auto market, and it is going to continue to rock the auto market. And in this article on the hedge, they gave some stats on U.S. sales in May. Honda down 57.3%. Toyota down 27.3%. Mazda down 63.7% in May. These are U.S. Auto sales for May. Nissan global April sales are down 29.1%. How in the world are people surviving in this industry? If you're working at a car dealership selling cars, new or used, how in the world are you making money? I don't get it. How are they keeping the overhead of these dealerships? They look like country clubs, some of them. I mean, they're stunning. How in the world are they keeping the lights on when they're not selling cars? Let's switch gears to home sales now. U.S. for sale homes rise for the first time since 2019. This on Bloomberg News. And I just jotted down some of these areas, and this is very interesting. Raleigh, North Carolina, active listings year over year are up 41.6%. New listings in Raleigh year over year are up 27.9%. And price reductions are up 7.8%. Nashville, active listings up 38.1%. New listings in Nashville up 22.8%. And price reductions in Nashville up 13.2%. Las Vegas, active listings up 18.6%. New listings year over year in Las Vegas, 20.7% up. And price reductions up 20.1%. We go to Austin. Active listings year over year up 85%. New listings year over year in Austin up 19.1%, and price reductions are up 18.3%. And there's just tons of them. I'll share one more. Phoenix, active listings year over year up 67.1%. New listings year over year are up 13.7%, and price reductions in Phoenix up 17.5%. Things are happening, ladies and gentlemen. Is this the time to buy a home? In my opinion, I don't give financial advice, but in my opinion, I wouldn't touch buying a home right now with a 10-foot pole. Don't do it. I would not do it. That's just me thinking out loud. You can do whatever you want to do. I think this is the worst possible time to buy a home right now, today. This bubble is beginning to lose air. We are seeing inventories pile up of new homes, of existing homes. Inflation, gas prices, the national average for a gallon of gas now is sitting at $4 and I believe 71 cents. Inflation, mortgage rates nearly, I believe, around 5.5% today. You can do whatever you want to do. Buying a house, I think, is a huge, huge mistake right now. Another article from the Hedge today, demand for American Gold Eagles explodes. And this is another reminder of why you must have assets, why you must have some physical, not paper, physical gold, not mining stocks, ladies and gentlemen, physical gold, physical silver. And people continue to ask me for a reliable source to buy physical gold and silver. SD Bullion, I have a link right down below. I've been dealing with SD Bullion for over 3 years. Phenomenal. Many of you turned me on to SD Bullion, told me I should be buying from SD Bullion. I did. I've been a client of theirs now for over 3 years, and I can't say anything negative or bad about SD Bullion. They've been fantastic. So if you need a safe, reliable source to buy physical gold or physical silver, go to the link down below, SD Bullion. Let's talk about this article. The Mint sold 147,000 ounces of American Gold Eagles in varying denominations, totaling 200,500 coins. That's a 67% increase from March. So gold is moving. Even though many call it a barbarous relic, we know that central banks have been stockpiling it. We know that countries all over the world, the globe, have been stockpiling it. Russia, China, India, you name it. They know the importance of gold. So far this year, the Mint has sold 661,500 ounces of American Eagles. For the year, gold bullion demand is up a staggering 617%. Remember, we're just talking about gold eagles here, but gold bullion demand is up a staggering 617%. When you factor out health-related sales disruptions, bullion sales are up 400% over the 5-year average between 2015 and 2019. Gold will always be a long-term store of value, ladies and gentlemen. And I can't stress enough the importance. I continue to buy gold. I'm probably about 80-20 gold to silver, maybe 70-30. My friends, family members, people very, very close to me are buying gold. To me, it's an insurance policy. I'm not looking to get rich quick. I'm looking to protect wealth. And we have never seen the uncertainty across the globe that we're seeing right now. And there's never been a time more important. I say this all the time because it gets more and more important to own real things, to own real stuff. Things that you don't keep in the bank, things that aren't just paper, things that are physical, things that have history. Gold and silver are God's money, ladies and gentlemen. It's never going to zero. Never going to happen, always going to have value. And guess what? It buys food, it buys water, even during collapses. There are farmers out there that have written me saying, we will take gold, we will take silver for food. We will take gold, we will take silver for cattle. Okay, ranchers and farmers have written me going, hey, we will take your gold, we will take your silver for beef, for pork, for vegetables, for fruit. So even in the worst times, I know there are people out there saying you can't eat gold or silver, but it is the most liquid asset on planet Earth. You can convert it into any fiat currency, but why would you want to when fiat currencies are going to zero, when it's just monopoly money? People who have real things, real assets like food, like vegetables, fruit, pork, and beef, ranchers and farmers, they're going to trade those assets for shiny assets like gold and silver if things get to that point. It is going to have purchasing power, but don't rely. Don't use your gold. Don't use your silver to buy food and water. You don't have to, because you can buy those things right now. You don't have to resort to trading or selling or converting your gold or silver if you already have food and water. And remember this, when we head into this new monetary system, when the dust settles, you're going to need money. I cannot repeat this enough. A bag of rice, a bag of beans, a case of water is not going to buy you 10 acres and a house. You're going to need money to buy land, to buy property, to buy a house. You're going to need real money. And to me, and this is just me, that real money is gold and silver. People know what is happening right now are buying gold, like Ray Dalio, the billionaire, the historian. He knows the importance of gold. And if you fear what inflation is about to do to your savings account, to your purchasing power, you better have some gold, you better have some silver. And I think silver's great because of the barterability that it has, and silver is going to come along for the ride. Gold, as I make this video right now, is up about $25. Silver's up about 43 cents. And another reminder here is that the Fed is not doing enough, and inflation is going to continue to run hot. And as inflation continues to run out of control, you better have some gold, you better have some silver. So I want to close with two last articles that I think are very interesting and important. One of them titled, "Restaurants Add New Fees to Your Check to Counter Inflation." The restaurant business is in disarray. It's in big trouble. They're adding fees now. So now you use a credit card, the credit card's adding fees. Now the restaurant's adding fees called kitchen appreciation, and another one called wellness. So it is going to be more and more expensive to go out and eat while we continue to get more bad service, smaller portions, and less quality food. And look, I'm guilty of going out to eat. I'm on the run a lot. I have an erratic schedule. I can't always go home and make something to eat. I don't have the time a lot of the time. And when I do cook at home, and I enjoy cooking at home when I have the time. And a majority of the time I do eat at home. But we're all in a situation where we're working, we're traveling, we're out and about, and there's, you know, the convenience of just grabbing something to eat. And me personally, I used to really look forward and enjoy going out to eat, to a hole in the wall, to a nice steakhouse. I used to really enjoy that. It used to really be a luxury to go out, eat, and get great service and great food. And that's getting harder and harder to find, as many of you have written me and agree to that. But now we're going to be getting fees when we pay the bill for kitchen appreciation and wellness. I mean, that's unbelievable. And my forecast is we're going to see more restaurants fail and more restaurants go out of business. They're just not going to be able to hang on. The administration cancels $5.8 billion in student loan debt for former Corinthian students. As I leave you today, this is just another guarantee that we're going to see more inflation coming to America. And this is why you better be preparing, why you better have some gold, you better have some silver, you better have a cash reserve, you better have a skill set, you better have something to fall back on. Because they're guaranteeing all of us, as we're sending money over to Eastern Europe, and now $5.8 billion in college tuition debt. Guess who's paying for all this? You are, and I am. And this is just being tagged on to the giant bill that we have, and it is adding to this inflation fire. And they cannot stop spending. And as they continue to spend and print more money to do this, we're going to have inflation. It's not going away. These people on the television today saying that it's going to slow down, that by the end of the year, inflation is going to really dissipate, and next year we may be back at that 2% target. I don't know what these people are smoking. They've been wrong for a very, very long time. They're going to be wrong again. And my concern is they are misleading so many people into these markets, into the stock market, into the housing market, just convincing people that everything is going to be okay. Just spend. And don't worry, by next year, everything is going to be back to normal. And they are leading people to a financial death. That's what they're doing. They're leading people to a financial death here, continuing the FOMO, and that the Fed is going to fix everything. The politicians are going to fix everything. They've all been wrong. It's going to get much worse. And it's going to be up to you, ladies and gentlemen. You're going to be on your own. So make sure you're preparing from security to your financial security, to your physical security, to your spiritual security. You are on your own. You will be responsible for you. So I'm going to leave it there today. Unbelievable, the incredible bad negative news that we're getting, and the markets have turned around. I don't know what they're going to close at, but it looks like right now markets will across the board close in the green on top of a collapsing economy, where more and more people are beginning to realize that this thing is going down and it's unrepairable. and that we're going to see very extreme times here in the US as this economy continues to collapse and markets go up. This thing is completely out of whack. Nothing seems to be real now. It's just digits on a screen as far as the markets are concerned. But you know, when you leave the house, go pump your $7 a gallon gas, go to the grocery store and buy a half box of cereal and pay double. You know, every time you write a check, every time you pull the cash out of the wallet, that this thing is not getting better, it's getting worse. And more retailers, more restaurants closing, more small business closing. The news is bad, ladies and gentlemen. Prepare, because this is just the beginning.